Let's get in a special voice, Vibhav Kapoor, Group Chief Investment Officer at IL&FS, to talk about his sense of what's happening in the markets currently. Vibhav, good morning. Thanks so much for joining in. Interesting times. We are above 8,500. A lot of uncertainty still existing globally as well. The earnings may not be the best this season. What does one do right now at these levels, at these times? Is it a good era of investment, or should one wait for some dust to settle?
Well, the markets have been range bound for most part of this year. If you look at the index on 1st January, it was around 8,500, 1st April it was around 8,500, and 1st July it's around 8,500. So apart from the small moves, it hasn't really done much. And I think a large part of that is to do with the fact that earnings did not grow last year as much as the market had expected. In fact, they didn't grow at all. And therefore, you had a sort of the market having run ahead of the fundamentals, and now it's sort of getting in line with that. So you really need earnings growth to restart in a big way for the markets to really start going up again in a big way. Till that time, I think the markets will remain range bound because while as you said, there are a lot of uncertainties, there are a lot of positive factors also, and they generally relate to the macros. Oil prices coming down, Greece probably going to get sorted out, Iran problem having sorted out, and overall the macros are pretty positive. So I think you will need earnings to restart growing, and then you can see again an uptrend in the market. Till that time, range bound is what we think.
So Vibhav, come this earnings season, could there be any bright spots when it comes to the Nifty sectors or stocks, or do you think it's only outside the index where some of the bright sparks could come in? Because a lot of experts believe that perhaps home finance companies would be able to deliver above ordinary numbers this quarter.
Home finance companies have been doing well anyway, and I think they will continue to do well. But overall, I think I don't see very many positive surprises in the earnings season, which is just commenced. It will be lackluster, and it will be what it was for the March quarter. So we don't really see any very, very positive surprises happening.
But Vibhav, that's in the price. Everyone is fully aware of the fact that we should not expect fireworks from Q1 FY16 numbers. It pretty much will resemble what we got with Q4 FY15. But is all the bad news in the price?
No, but you see the markets haven't fallen also, right? They are in the same level they were 6 months ago. So it's not as if, earnings didn't come up to expectations and the markets fell. So there is still a lot of hope, and there is still a lot of optimism that, okay, if not this quarter, then maybe next quarter or the quarter after that, earnings will start to improve. So that's why we are saying that we don't see the market to expect the market to fall because the earnings are not going to be, there are not going to be any positive surprises. We are just saying the market will just continue like this in a range for some more time. You also have the monsoons, which are still iffy, and if the monsoons, the rest of the monsoons don't turn out to be so good, then even the September earnings will come into question. So I think all in all, there's a balance between some positives and some negatives, and therefore the market is going to stay in this range for some more time. Also the valuations, if you look at least at the Nifty, overall they're not that cheap. They're about 17 times FY16 earnings.
Well, as we speak, Nifty is now sitting above 8,500. Vibhav, the first half of this calendar year has been a choppy one for Indian markets. Nifty and benchmark indices, they've done nothing. Do you think progressively the second half could be better for benchmark indices and for markets in general?
Partly it's going to depend on the monsoons. If the monsoons are reasonable, then I think you would see some improvement in earnings starting, maybe not in the September, but definitely in the December quarter, and that would be positive for the market. If the monsoons are not good, then the earnings trajectory will not start to grow maybe for another couple of 2 or 3 quarters, and that will not be so good. Of course, there are other imponderables. You have the US interest rate hike cycle, which can start. Again, there's so many data which come from time to time, and the market is still wondering whether it will be September or December. But I guess sooner or later that's going to start towards the end of this year, and one would really need to see what impact that has on fund flows. All in all, I would think if you look at the time till March, you're probably looking at the market somewhere, staying between 8,000 and maybe 9,000 or 9,200.
So Vibhav, I mean, what is your sense sectorally? What's the texture of the market going to be like from here? So, interestingly, even when one looks at the auto sector, for instance, you've got a Maruti on one spectrum, which is at fresh highs, and Tata Motors, which is clocking fresh 52-week lows on a daily basis. What, according to you, sectorally is going to stay in the outperforming bag from now on?
Well, to start with, I'd like to tell which is going to be probably the most underperforming sector, and that's PSU banks. I think there are still a lot of pain in PSU banks for the next 2 quarters. The market is not still clear as to how much further NPAs will happen. So that's one sector to definitely avoid for the time being. As far as the positive sectors are concerned, of course, private sector banks, to some extent, the momentum is good there. NBFCs, housing finance companies, maybe automobiles, particularly two-wheelers, if the monsoons are good, and maybe construction companies, the EPC construction companies, especially where a lot of orders are slated to happen. Then the transmission companies, where also a lot of new orders are happening, the power transmission companies. And selective capital goods. These are the sectors I think which should do well.
Okay, Vibhav, final thoughts, and we've discussed about the economy related sectors. If I were to ask you what within the export oriented themes looks the most promising, and it doesn't just include the large caps, because the IT and the pharmas are known, but a bunch of mid-size export-oriented themes are coming up thick and fast. I mean, textile exporters are right up there. We've seen auto components do very well. A bunch of other smaller spaces are right up there too. What is your favorite theme, if you have one in the export-oriented spaces?
I think pharma will still continue to do well. IT has a lot of problems over the next few years in terms of new technologies, etc. And the growth rates are not going to be 20–25% there, so they'll more be in the 12–15% range. So the market valuations will have to adjust to that. Textiles is definitely a sector which is doing much better now than it was doing earlier, and we are positive on textiles, but on a selective basis, not for all companies, but for the companies which have some brands and which have a good track record. I think that's a good sector to be in. Auto parts is going to depend a lot on Europe, because a lot of the auto parts exports go to Europe, and you will need to see the Greece problem getting solved and Europe coming back to a stronger growth strategy for that sector to do well.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.